pre-2020. All right, so this is, here's a W-4 form from 2019. Now, there can still be employees using these older W-4 forms. The form year doesn't mean that's when they filled it out. They could have, well, chances are they filled it out in 2019. But it just means that they're under the old regime and they haven't filled out a new W-4 form. So this is what the old one looks like. Much shorter than the new one, right? You'd think it was more simple. It's really not. But so all of the identifying information up here, and then we don't have filing statuses on this form. We have, are you single? Are you married? Are you married but you want us to withhold like you're single? That means you'll have additional withholding if that box is checked, because as you can probably tell from the tables that we've used, depending upon your filing status, if you're married, filing jointly, you're going to have less withheld from your paycheck as opposed to if you were single with the same amount of income. Then, number of allowances that you are claiming. What the heck is an allowance? So allowances used to, in 2017, they passed the Jobs Cuts and Reconciliation Act, which did away with a big component of, well, a lot of big components of the tax code. One of those components, though, were called exemptions. So you would get an exemption which acted like a deduction. It reduced your taxable income. You would get an exemption for each individual that you had on your tax return. So if you were a married couple with 3 children, you would get 5 exemptions. If that exemption amount was $4,000, which when it ended, it was roughly $4,000, you would then get a deduction of $20,000, 5 people times 4,000. So the greater the number of people that you had on your tax return, the greater that deduction would be. They did away with that. Instead of you're shaking your head. Now, what they did instead was they increased the standard deduction, which was another type of deduction that's still there. They doubled it essentially from what it used to be. But if you had, a lot of kids, or you had a lot of individuals who were dependents on your tax return, you probably lost out in the change. You probably are paying higher taxes than you were before because of this change. But these allowances were to correspond with the number of exemptions. For the most part, there are other reasons that you might have allowances. But the higher, just like with the higher the number of exemptions that you had, the lower your taxes would be, because the higher your deduction you would get. On the W-4, the higher the number of allowances, the lower your withholding would be. Now there's a separate worksheet for calculating how many allowances you were entitled to, and I'll show you, it's on the second page of this. I'll show you how that worked. So, number of allowances, additional amount that you want withheld from your paycheck. So just like with the new W-4, there's just, if you want an additional flat amount withheld, you could do that. And then there's a spot for exemption. And this exemption would apply now as well if you are exempt from having taxes withheld. So if you had a refund of all federal income tax withheld, so last year you didn't owe anything, and you expect that you're not going to owe anything this year, then you could just write in here exempt and nothing would be withheld from your taxes. I think I mentioned the most commonly that happens with like dependent children who maybe have a summer job or after school job or that sort of thing, where they don't make enough money, they have to pay taxes, and so it saves them from having to file a tax return at the end of the year to get any refund back. But that was it. Those were the questions. Are you single, married but withhold at a single rate? How many allowances? And that was essentially it. That would help to calculate your withholding. So this is the allowances worksheet. You would only get one for yourself. One, if you're gonna file married filing jointly, these are separate, these all get added up. So one for yourself, one if you're gonna be married filing jointly, one if you were gonna be filing head of household, so having to do with what your filing status is. One, if you're single, married, filing separately and only have one job, or married filing jointly, have only one job and your spouse doesn't work, or wages from the second job is $1,500 or less. So you get another if only one of you had a job. Tax credit, child tax credit. So you go through all of these. If you are going to be entitled to the child tax credit, you would get to enter an allowance for each eligible child. So if you had 4 kids, you could enter 4 in there and you were eligible for it. So now you're up to like 6 or 7 allowances. Credit for other dependents. So remember that question is on that line 3 on the current W-4 form addresses this child tax credit and credit for other dependents. It's just done a little bit differently. So again, one for each eligible dependent would be listed on line E. Other credits, so if you have other credits and then there's a separate worksheet to determine that, you would enter allowances for that. You go through all of it, you total up all of your allowances. Then that's what you put down here, the number, whatever number you come up with. Again, for the pre-2020 method, we still have 4 pieces of information that we need. We need the taxable income. We need the frequency of pay. So these 2 are exactly the same as what we have, the 4 factors that we need for the new method of calculating the post. So let me just put that up here. So post 2019, pre 2020. So this is the same, taxable income. Frequency of pay. You remember what these other ones were? Put those up there. Filing status. What was the last one? Checkbox. All right. We don't have those items on this W-4. Instead of filing status, this is different. We have, are you single or married? Or that other choice of if you're married but you want to be withheld at the single rate, right? Single or married. Number 4, allowances. How many allowances are you claiming? Those are the 4 pieces of information that we need for the old method of calculating withholding. We are still going to use the same form, the same Hub 15T. We're going to get the 2023 one up. That's 2024. I don't want that one. Let's see if this will. All right. You'll see that on this form, or on this in this publication, we actually have the tables and everything that we're going to need. So we're still going to use either the wage bracket method or the percentage method. Still, the wage bracket method is going to be easier than the percentage method, just like with the new W-4. But we've got with W-4 forms from 2019 or earlier, W-4 forms from 2019 or earlier. So let's take a look at how this works. I'm gonna keep this up. Those 4 pieces of information. So let's look at the wage bracket method. Now this is a lot easier. The worksheet's a lot easier to figure the tentative withholding amount. All right, so here are the tables. What we have over to the left are again, well, first off, we have to find the correct frequency. And then we have to find the correct married or single. Married table or single table. So those are two items that you need to find up at the top here. So weekly payroll, married, that takes care of the first, this one and this one. Taxable ranges over here, and again, same parameters apply. If it falls right on the line, you go to the next one. You go to the next line. And then we have allowances. These are the number of allowances. Now, what if you have more than 10 allowances? Because you saw that worksheet, it's entirely possible to have more than 10 allowances. You can't use the table. You're going to have to use the percentage method instead of the wage bracket method. But so, for example, let's just say, so let's look somebody up. So taxable income, something reasonable so that we can find it on the table. Somebody want to give me an income?
1,200.
1,200. How frequent?
Weekly.
Weekly?
I think that's what you're calling.
Single or married?
Married.
Married. How many allowances? 7.
Good call.
All right.
It's only 1,200.
All right. So we've got weekly payroll period married. We're on the correct table here.
Oh, yeah, we could.
So we're going to find 1,200, which is between 1195 and 1210. This is the row that we're going to use. So for for 7 allowances, $34. Easy peasy. Let's do one more. So give me some more info. Taxable income?
800.
800. Frequency? Semi-monthly?
Yeah.
Okay. That's okay. Single or married? Single. How many allowances? 4. So let's find the correct table for semi-monthly. You gotta scroll down a ways here. We're still in the weekly, bi-weekly, bi-weekly. Semi-monthly, okay. So semi-monthly, single. They put the married first here. Okay, single. Semi-monthly, $800 is between $780 and $830. There's our row. So the first one is 0 allowances. 0, 1, 2, 3, 4. 0. Okay. Pretty easy, right? Not bad. All right. Any questions on that? Okay, you just have to use, you got to use the right table. Again, you got to make sure you're on the right table. Okay, so let's look at when we cannot use the table. And we've got to use, so we can't use the wage bracket method, we have to use the percentage method. This is important information up here. Now again, you can use this worksheet to work through the problem. If you follow line by line and read carefully the information that they're looking for, you can use this worksheet to determine. So again, you arrive at the adjusted wage amount. So that's our taxable income for this particular pay period. Then we have to figure the tentative withholding amount based on pay frequency, employee's adjusted wage amount, and marital status. Find the row in the percentage method table in this section in which the amount on line 1D is at least the amount, so you can tell we've got similar tables here, right? So but then we have to do an additional amount using these numbers. So let's do this first. So enter the employees. So give me taxable income, taxable wages.
2,300.
2,300. Frequency,
Bi-weekly.
bi-weekly. Single or married?
Married.
Married. And how many allowances?
3.
3. Okay. All right. So if we use this worksheet, we've got our adjusted wage amount already, because enter the total taxable wages. Oh, no, I'm sorry. We have to actually adjust this amount. So enter the employee's total taxable wages this pay period. We've got that. 1A. 2,300. This again, so taxable wages. Enter the number of allowances claimed on the employee's most recent W-4. That's 3. Multiply by line 1B by the amount in table 7, this is table 7, for your pay frequency. All right. 1C is 3 times biweekly pay, 165, equals times 165. 495. And then line 1D, subtract line 1C from line 1A. I heard somebody saying that. All right, 1805. So this is the first step in the process. We have to adjust the taxable wages by multiplying the number of allowances, this is where the allowances will come in, the number of allowances times whichever is the appropriate number up here. Okay? All right, so there's our adjusted wage amount. Now we're going to do the same thing that we did before. We're going to go down here, find the row of the percentage method table. So we got to go to the correct pay frequency, semi-monthly or monthly, and then either choose married or single. So there's no checkbox here, just married or single. So we got married. We're going to use this table here.
For bi-weekly.
What's that?
Bi-weekly on the word.
Oh, is it oh, you're right. Bi-weekly. Thank you. Bi-weekly payroll period, married individual. So if the adjusted wage amount is between these, so 1805 is between 1415 and 4010. Tentative amount is 8460. So again, we can just put that over to the side somewhere. Here's our tentative amount times 12% of the amount over 1415. Right? So 390 times 12%. $46.80 plus $84.60. Sorry, no, that's low. So $131.40. Let's see if we can find that on the table. I don't know if that would. So if we were to look at the table, so we've got bi-weekly, married, I don't know if they fit on the table. Oh, they probably would. That's monthly. bi-weekly married. Oh. Married is first. 2,300. So here we're not subtracting those we're not multiplying the allowances by a set number. You're only doing that with the percentage method. It's already baked into the tables. You don't have to do that. So we still take the 2,300 between 2,270 and 2,320. Got 3 allowances. It's $131. Okay. Let's do one more using this. So you guys can give me some numbers. You can make them ridiculous if you want. Taxable income. Make them aspirational.
5 grand.
How much?
5 grand.
5 grand.
Daily.
How often?
Weekly.
Weekly.
Yeah.
Single or married?
Just
Single.
Aspiration.
How many allowances?
2.
2. All right. So the first thing we're gonna do, remember, taxable wages. We'll use this so we can get used to that. So taxable wages 5,000.
Harry Killer just had his
1B. Enter the number of allowances. 2. 1C. Multiply line 1B by the amount on table 7 for your pay frequency. Okay, weekly is going to be $83. 83 times 2, 164. No, 6. Right, $166. 1D, we're going to take the 5,000 minus 166. So we have 48.34. I got that right? I'm sure, I think I do. Okay, so 48.34. All right, now we're gonna go down to the table. We'll figure our tentative amount to withhold. All right, weekly pay period single. Right? It's gonna be between 48.34 is between 45.48 and 11.219. Tentative amount to withhold is 1,015.96. So there's our tentative. Put that there. So we'll take 45.48 from this. And you can go through the steps on the worksheet if you want, but. So 286 times 35%? Plus 101596. $11,1606. Okay. This part you guys have down because you did this with the post 2019 method. It's the allowances part, and remembering to do that, subtract that from that, the taxable income. So you can see how the more allowances you have, the less your tax would be, because the more we would be reducing our taxable income. Like if it had 10, right? If they had 10 allowances, this would be $830, so we would reduce that by the 830, it would be much lower, and it would then reduce the tax. Okay? questions about that? Nope. Okay. I know, I make it seem so simple. Just kidding. That was a joke, guys. Lighten up. Okay. Do you want me to do any more practice on that? Okay. All right, so again, still there's a minimum of 4 pieces of information we need. It's just that 2 of those pieces of information are a little bit different, are different from the other one. I will show you in here somewhere. I think I have a whiteboard image up here that goes through that. Yeah, like this one. So just kind of summarizes. So for the pre-2019 and post-2019, actually it should be pre-2020, wage bracket method, percentage method, we can use either method or either of those. Some of the advantages, it's simple. Disadvantage, it's limited to income. This is more complex, but there are no income limits and no allowance limits when we're talking about the pre-2019. These are the 4 pieces, minimal pieces of information that are needed. So for the first 2, they're the same, taxable income and frequency of pay, but then the last 2, married or single, here for the old method, filing status for the new, number of allowances for the old method, checkbox for the new. Okay, so a little summary of some of the differences there. And that's something that you can, so in the very first module, you've got a link to these whiteboard images. What else do I have in here? Stuff we've already gone through. All right. What I want to do now